Hello, active traders, and welcome to Trading Oil and Gold, Stocks and ETFs. This is Ken Calhoun, your host, president of the original Day Trading University, as well as Trade Mastery. And it's great to see so many of you here. We've got a really exciting event lined up here for you tonight. As you know, gold's been in a rally the last month or so, and our gold miner stocks have continued to take out new highs, with the S&P plunging to new lows today and gold moving up. We're also seeing some movement in oil and the oil ETFs and ETNs. Tonight's a preview for the premium course that's offered at Trading Oil and Gold. This is a preview webinar being held April 7th, 2016. The premium event is coming up a week from tonight on April 14th. If you're watching this at some point in the distant future, you can download the video of the event after April 14th as well, and it's a full hour and a half. And what you're going to learn tonight, we're going to be looking at specific strategies designed to help you capitalize on not only scanning to find what's worth trading, but also how to set up your entry signals, and mostly for swing trading, not so much for day trading. This one is mainly for swing and even long-term speculative swing trading, up to say 2, 3, 4, 5 months, not just 2 or 3 weeks, not quick hit and run swing trades, especially with crude. I'm looking to make huge gains in my retirement account as well as my active trading account by trading bounces in crude, and I'll show you why in just a minute as we look at live market charts. So you're going to be learning a lot in the main event. I'll tell you a little bit more about that in just a few minutes in terms of how to get involved with that. But first, let's take a look at tonight's main presentation. As always, all information is for educational use only. I'm not making advice about to buy, sell, or hold. By watching this, you agree not to make actual trades. If I had $1 for every time I said that, I'd have like $13,000. So anyway, I do thousands of webinars. You may have seen me live at Las Vegas. You may have seen me at CBS Market Watch, TheStreet.com, Stocks and Commodities, Active Trader, Money Show. I'm a UCLA grad, blah, 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 blah. I'm rich, I'm famous, so what? Let's get on with it. What are we going to learn tonight? Let's run through our bullet points and then hit the charts. Scanning to find out what's strongest, okay? One of the key strategies for successful professional swing trading is making sure that you've got very well-defined entries and exits and high-velocity, wide-range charts that are most likely to make you money. Okay, I'm in it for the money. I'm not in it to be a technical analyst. I'm in it to make money. That's what I do. I'm a professional trader. So I'm going to teach you some ideas to get started tonight in the main event. We're also going to look at entries and exits and how to set them. One of the core strategies that you need to get real clear on, as my colleague Brian Tracy would say, to gain clarity and get focus and set goals and be very productive. I'm a big fan of Brian Tracy's when it comes to setting specific goals. In trading, I'm more interested in developing a specific profit-taking approach that gets me in at the right entries, at the right inflection breakout trigger points, and then out again before the market takes my profit back. In the main event, we'll look in detail at how to set them, and we'll touch on that tonight. A third tip is to look at how to add to winning trades. This is especially critical as my colleague Van Tharp, Dr. Van Tharp, who originated the concept of position sizing or scaling. We in industry typically just call it legging in or layering in or scaling into the trades. You really want to be keenly aware of how to add to winning trades. For swing trades, for short-term swing trades, you know, I may add in every 2 points or so. If I buy 22, I might buy again. Say I buy 50, 100 shares at $22 a share. I might buy another 100 shares at $24 a share, another 100 if it gets up to 26, and then trail a stop at break even and start to scale out if it starts to lose key support levels. Well, you want to develop a trading plan that's very intelligent, that helps you snowball, as I've done for so many years. You get into a small pilot trade. That way it doesn't hurt you if it goes against you. And like if you buy a dead cat bounce, and then it goes against you, okay. A little sound effects there to go along with tonight's festivities. It's great having so many hundreds of traders. Anyway, scaling in and risk management, we're going to look at that, and also oil and gold specific trading plan ideas and concepts that you may want to start giving some thought to. So like that's pretty much it for the PowerPoints. I've got a wrap-up slide at the end of the show, but that's it. So without further ado, let's get on with it. I'm a trader. I don't live on my PowerPoints. I live on my charts. That's what I do for a living. So anyway, let's take a look at who's hot lately. I've been trading Barrick. I don't know anyone else trading ABX. I've been telling you guys long this thing since 10, right? It's ran up to 15, so only 50% improvement in the price. one of the key strategies that I teach is how to set entries based on follow-on trades after wide range momentum high velocity candles like this one. So we don't want to go in until at least 50 cents above the high of that candle, and since we're here already, let's bounce that up to over 16. So I will likely put in, and not a trade recommendation, but what I'm likely to do is add to my winning trade by scaling in over 1620 or so, or if you're not in yet, that might be a new place to initiate a new trade up at say 16.25. What you'll learn in the premium event is how to set a series of entry triggers for all of these instruments, and not just an initial one like I just demonstrated, but a series of them. So you've got 2 entries, because I'm not in it just for the first trade. I'm in it to make money on the longer term as well. So not that I'm going to trade these things over years, but for a couple of months for a round trip, if I see anything like the oil holders start to pivot, or other ones I like to look for, oil's taking it in the shorts, going from 27 down to 5. If it gets back to 10 or 12, right, how do we trade it in the interim once it gets over the moving average line? How do we scale in to make sense of that trade and make money with it? So for the short-term momentum, you can see off the February, how's that for a, what do you call, a Valentine's Day gift? That was the low of the oil, the crude market was mid-February, and it's gone up nearly 40% since then, right, for most of the crude instruments. All right, we've gone from 8 to 10, 20% maybe. UCO, we've gone from 6 to just under 11. Right, so we've got big runs up lately in the crude oil ETFs, and they've bounced over this 50 moving average, but not yet over the 100. So I want to take a look at some strategies designed to capitalize on how to make the most of those charts. Anyway, let's get back to gold, and then we'll follow up with oil. You can see all of these are moving up nicely, right? All the gold miners have been on fire. Barrick, Newmont, NUGT, despite some choppiness, they ran from 22 to 62. Don't let that escape your notice. The low was 18 or 20, now it's up at 60. 300% gain. How much further can it go? We don't want to fool around with it inside a congestion region, but if it does take out new highs, that may make sense to develop into a trading plan. I like this chart better though. I like GDX. I've been trading GDX for years. It's one of the gold miner ETFs. One of the patterns that I've taught so many tens of thousands of traders in my money show appearances and my stocks and commodities and equities and other articles that I've published around the world for the world's active traders is to look for a wide range tall momentum candle at the right side of a bullish cup or at a congestion area. I know I've got copycat competitors that ripped off that pattern and gave it some stupid name, but I originated this as a momentum cup breakout pattern with a wide range candle. Right? For more on classic candles, be sure to learn from my colleague Steve Nissen, the world's top candlestick authority and expert. He's the go-to guy for candles. I learned how to combine them with momentum breakout signals like high volume. It's a good technical case for a trade. High volume at the right side of a bullish cup. And if you want to be a little more cautious, you wait till it breaks above the nearest moving average line. That's a rider downer, by the way. So if you see something that you think is starting to come back to life, like Frankenstein's monster, bzzz, it's alive. Well, weird science, not quite yet. Wait till it gets over the 200 MA because that's likely to attract institutional buying volume and professional traders like me. So boom, shakalaka, we're off to the races. 16 to 21, a 5-point epic win. Now we'll see if it takes out 2150 for the next chapter of its story. A quick momentum trading tip. We did have a nice tall green candle here. We had a nice large momentum candle here and there. I'd want to see another large candle at the right side of the current resistance area before going in long. And I'll teach you how to do that in the premium event, but that's kind of what you need to look for. There's a whole series of quick thumbnail, easy to understand techniques to implement that, and I will hold off on revealing that for the premium event, so we have an hour and a half to go through that. But tonight I just wanted to introduce the concept. Very intelligent, very correct, very professional series of trading strategies designed to get you in on charts that are actually likely to run. So cup patterns, classic Western TA, where you're, say, pivoting off of an MA, breaking above a new one, breaking above a new one, and then it's off to the races. Now it's found support at the 50 moving average. From a momentum standpoint, I don't like the fact that all these candles are relatively flat and choppy and uncertain. They're doji-ish. They're uncertain candles. So gold doesn't, the GLD ETF doesn't know what it wants to do. So I'm not going to trade it. I want things that have a clearly defined uptrend continuation pattern, like AEM. It ran up, it's gone sideways, it's starting this last week to run up, right? If you take a look at the tighter chart here, you can see a nice uptrend continuation in Barrick, and not only that, but it gapped up today. Flawless victory. Pa-ching! And I've been calling this long for my traders in my live room lately as well, because we've seen it continue to run up. So if you do trade less expensive instruments, ones with a reasonably strong uptrend like this may make a little more sense to trade. Okay, so that's a quick thumbnail look at some of the gold ETFs and ETNs and gold instruments, the gold sector that we want to trade. I like the fact that it's trending strongly. Now, if the broad stock market sells off like a son of a gun, right? You see the S&P had a down day today. Boom. Epic fail. Dead cat bounce. Well, I don't think so. It's still a seller's market right now. So if this thing keeps going down, note that gold has an inverse relationship to the stock market. So obviously, inconceivable. You keep using that word. I don't think it means what you think it means. I've been watching The Princess Bride a lot. I love that movie. Anyway, my name is Inigo Montoya. Boom, shakalaka. Let's see if this puppy takes on new eyes. We have a shooting star up there, so obviously we can't go long here. But only slightly less obvious is the fact that if we continue on up, it may be a good breakout. But we want it to get above the shooting star, eh? We have two shooting stars. Danger, Will Robinson, warning. That's resistance. It kind of gave, like my colleague Steve would say, market leaves clues. Well, that was kind of a clue, a giveaway. You'd obviously run into resistance there. So obviously you can't buy it there. But it does have upside potential. Where to get in? Question mark. Inquiring minds want to know. I'll teach you how to develop those kind of entry strategies in my premium event coming up in a week from tonight, a full hour and a half with Q&A. And as an added bonus, you too will get the downloadable version of the, I only do these once a year, by the way. I only do oil and gold once a year because I'm so busy with all my other 72 websites. I'm the busiest guy I know and the hardest working guy I know in the whole industry. I work harder than anyone. Well, anyway, the point is you'll also get the download from last year so you can get up to speed. Plus, you'll get the webinar coming up a week from now. And it's only $97. Normally, I used to do this at $197 and fill up the house. Well, this time, because I know, I guess people are cheap, I'll make it cheap for you guys. So no-brainer, easy decision, $97 for an hour and a half of training. Okay, but now let's get back to our regularly scheduled program with a look at oil. What's going on in the wide world of crude? I had one of my traders from Dubai had asked me about that. Riyadh had asked me about that 4 days ago with the support ticket. My money glands are tingling here, right? My spidey sense is tingling because, yeah, crude has tried to do a couple of half-hearted bounces and they've just been dead cat bounces. I'll spare you the sound effects. Really tempted to make it, but I won't. Think how much money you could make if you get in right on a pivot in crude. Now, it's still catching a falling knife. I don't see any evidence that it's worth buying right now, okay? Au contraire, mon capitan. I like Q from Next Generation too. But anyway, au contraire, mon capitan. We don't want to go long here because obviously it's still selling. But if it comes back to life starting at the 50 MA, or it's starting at other pivot areas that I'll be teaching you about in the premium event, which are even more valuable, kind of thinking ahead of the institutional crowds. We get in earlier and stay out of false breakouts. Think how much, let's click through all these oil charts. Now, what you don't want to do is blindly buy these things and, just throw darts at them because, had you done that back here, you get stopped out, or here you get stopped out, right? Or here even you may get stopped out. So there are some specific signals that you want to look for that are far beyond simple horizontal support resistance. The professional traders, I'm banking on the greed of the professional traders on a short squeeze, all right? Which means you got the world and its brothers all short the oil sector. But at the first sign that capitulation is there and we're starting to see some support, which technically we're seeing a little bit of support here, but nothing to write home about yet. At the first sign of a short squeeze, and this is important, you should, I can't give investment advice, but this is the kind of thing you might want to talk about with family, friends, coworkers, and the world at large, is that the first sign of a bounce, and I'm going on record as saying this, and I'll put this video on YouTube so it'll be timestamped and the world will see what a genius I am when this thing is back up at 15 and I told you it would be worth buying on a pivot. But anyway, the point is, when there's an institutional short squeeze, how fast do you think the price of crude is going to run up? faster than you think, right? Usually the markets take a elevator down, boom, because of fear, and then a slow stair-step grinding method on the way back up. But not so here, because we have so much short action in these instruments, so much heavily institutional short selling, that at the first sign of capitulation of the shorts, the bad news bears are slapped in the nose and the bulls come rushing back in, you're going to see a big epic run up faster than you'd feel comfortable trading if you weren't prepared. So now is the time, the ideal time in the world to learn how to trade the flip side or the upside in crude at the first sign of a bounce. Because look at the profit potential in all these things. I am counting on the fact that oil is a heavily manipulated commodity, that people with bigger bank accounts than you and I, that are, our colleagues in the Middle East there, that, will limit production, and they do what they, we've got more supply coming out of, there's more oil supply coming out of Iraq and Iran. Domestically, it's not even profitable to run oil rigs anymore here in the U.S. because of the low price and the overglut of supply of oil. That is going to dry up at some point. And I am very much a cynic, and I won't say cynical, skeptical. I will say that what you want to do as a trader, remember I'm saying this, and go on record as saying this, I'm very proud to say this, institutional traders and insiders and people with more money than you and I are likely to run oil back up for their own benefit, just as a speculative instrument to play, okay? No one else is talking about that. They don't tell the public this kind of stuff. You got to kind of look pay no attention to the man behind the curtain. By the way, the new release of something called like Beyond Oz by Disney is a great remake of Wizard of Oz. I just watched it with my family last week, but I'm off topic there. But the point is, the institutional traders and the people over in the Middle East that have much bigger bank accounts, it's in their best interest, and you don't think that OPEC is going to try and do what's in their best interest, it's a heavily, I won't say manipulated, because that's a little cynical, but it's a heavily controlled market, and people are making money both directions. It's your goal as a trader to make as much money as you can on a pivot in crude, and it may not occur till summer or this fall. I'm not saying it's going to bounce tomorrow or something like that. On the other hand, what you want to do is be prepared for a potential bounce in any of these oil instruments. Same thing with inverse ETFs. I trade them all. I trade oil, gold, and inverse ETFs. You think you can make some money if you bought UCO on a pivot. And again, the obvious area is here. We don't want to trade the obvious area. I want to teach you in the premium event a series of several. I'll give you at least 2 entry triggers for all of these things, okay? Probably more, because I want to get you in on a ladder, a stairwise progression of longs at the first sign of a pivot. Now, right now, nobody's thinking about buying crude much, right? Even despite the recent bounce that we saw. Think about it. In UCO, it went from 6 to just under 11. It nearly doubled from the low to the high range from Valentine's Day. Happy Valentine's Day for the crude bulls, bashwang, and it's starting to find a little support there. Still not real excited about it till it starts to fill this region, and then I'm all in. Then I'm starting to hammer away at it. And I'll teach you how to do that in the upcoming event. And by the way, it's not going to be, unlike my competitors, it's not some low price front end, and then I try and sell you some, $1,000 magic oil indicator that you too can use to make magic trades. I don't think so. That's a bunch of hooey. I'm an honest person, and I give you great training, and I make it up on volume with hundreds of traders. It's worth my time, and it's worth your time, definitely. If you make just one good oil trade, your 97 bucks is paid for and then some, eh? So anyway, let's get excited about it. These kind of charts, it's very seldom that a pivot chart gets me excited, right? Back when I was in my 20s, long legs and a short skirt would get me excited at a nightclub. Don't hate the player, hate the game. Well, nowadays, lots of money gets me excited. The older I get, the less I like people, the more I like money. I'm all about money and getting more of it. The wealthier you get as a person, by the way. I am fairly affluent. One of the things that I live in a McMansion, 4,000 square feet in the exclusive community, and I live the life. I go to Bellagio Hotel with my family all the time. It's not all the time, but at least a couple times a year. The more you make as a person, the more you think about protecting your wealth and building your wealth. I look kind of like Mr. Wonderful on Shark Tank. I look at my dollars like soldiers, and I want to send them out to battle in the markets, and I want to come back with POWs. I don't want to come back with casualties. I want to come back with more than I went out there with. And so from a profit accumulation standpoint, you really want to develop a trading plan that makes sense. Now, I had a bullish engulfing here, and it did hold for a week or two, but eventually it sadly wound down to new lows. We want to start looking for pivots at key inflection points in any of the oil instruments, right? That's the big money play for this year. Okay, that and the inverse ETFs and potential continuations in some of these short-term plays in the gold miner ETFs like Barrick and Halliburton and GDX. Those got out of order. Okay, well, sorry about that. Anyway, the point is we've got so much out there that's worth trading. One of the things that I want you to do is you get excited about this stuff. It's very few things except the prospect of making lots of money get me really excited. So I can't promise I'll make you a fortune, but I promise I'll give you my best shot of exactly how and where to trade the oil sector on its potential upcoming recovery. You know, it's funny, I was playing poker at Bellagio, and I was talking with this really rich retired guy about the balancing crude, and he was saying he wanted to play the balancing crude back in summer when I was there in June with my family. It was either June or July at Bellagio, and I was telling him not quite yet. There's some signals you're going to look for, and I hope he took my advice because these instruments have got cut in half since then. Now, though, it looks a bit to the overextended side, to the downside. We may well see some upside potential in these instruments, as well as momentum plays on the shorter term in our gold instruments. So I'll be covering all that and more for you in the upcoming event. Let me know if any questions, because, by the way, is this good timing for y'all, these quick, like a 30-minute preview? I don't want to give away the farm. I don't want to sit around and drag it on like my competitors do. They'll sit there and do these hour-long pitch fests with PowerPoint. I think that's stupid. I'm a real trader, so I'm a real money guy. I like to look at real trades and real charts and tell you where I'm going to be trading at least, and give you some insights kind of behind the curtain of how an actual working trader does his thing, and be able to give you specific Q&A and guidance and tips and strategies designed to capitalize mainly on the bouncing crude, and secondarily kind of on a momentum continuation plays in gold as well, because gold's hot now, so it's worth looking at, but it may slow down at some point. Oil's most likely next up to bat in the next couple of months, and so I want to get you up to speed on what to look for. So there's a few things that I'll add to the mix that we cover in oil bounce trades, but you know, as CEO and founder of Trade Mastery and the original university, Day Trading University, and I also run Swing Trading University and E-mini University. I'm the original guy. I want to teach you some strategies that at least I use in my own real money trades and get you up to speed on that for a big bounce in oil coming potentially sometime sooner rather than later. May not be till summer, but I want to get you up to speed on what to look for so you're ready to trade coming up, you know, because here we are. And look at the profit potential. You can't just throw darts at these things because you're going to get stopped out on false breakouts. I'm an expert at avoiding false breakouts. I'm one of the industry's top experts in breakout trading. You may have seen me in Stocks and Commodities or Money Show or Fidelity or Equities. They're all over the world. It's kind of fun. And as a bonus for ordering now, I'll go ahead and enable your access to the members area so you get last year's event. You can see how well my calls worked out too, by the way. Epic wins. Anyway, you can download this from last year, and then you'll also get access to the upcoming live webinar a week from tonight, and it's going to be a minimum of an hour and a half. Like last year, you can see it was a runtime, an hour 43 minutes. So a lot of Q&A time too I build into these as well, so that I can answer your questions thoughtfully, honestly, sincerely, professionally, very step-by-step active trader training that's, you know, very well respected and very much appreciated. And I appreciate your all's involvement in working with me, because I'm here to, as a team, try and help us make as much money as we can potentially with these plays. It's very rare for me to look for pivots, because I learned the hard way, usually doesn't pivot when you think it's going to pivot, and it'll keep going against you. So now, though, these look so overextended, which is a word I almost never use because it's not a good word to use, but it's very seldom that I will look for pivots in anything, because it's very rare to see pivots. Usually things keep going in trend 80% plus of the time. But because these have been cut down, you know, 300%, you know, it was 40 a share, now it's 10 a share. right? Very easy for it to do a 50% Fibonacci retrace back up to the 20, or fill the region to the upside in a good professional trader's approach. So I'm a professional trader. I'm Ken Calhoun. It's what I do. Hope to see you there. And I absolutely promise and cross my heart, there's no upsell or pitch or anything after this, okay? You get in for your 97 bucks, you get the honest, complete training, and at the end, there's nothing else I'm going to sell you. So that's a big relief, right? A lot of you have been burned by my competitors, aren't even real traders, and they try and sell stuff, and then they try and incessantly pitch other stuff, like it's kind of bait and switch. They'll get you in on a low price event, and then they say, and for more, join my $10,000 a year Platinum Mastermind Club because you too can become the next winning trader. That's a bunch of hooey. They ought to be horsewhipped. I'm here in Colorado, so I and I'm a big fan of Wild Wild West. It's my favorite TV series with Robert Conrad, James Conrad, from Conrad back in the 60s. Anyway, my point is, we're going to look for the very best plays, and I'm going to walk you through exactly what you need to do to develop a trading plan that's sensible and is focused and is designed to help you capitalize on any pivots that we do see if and when crude comes back to life, which it will at some point. It's a manipulated industry, right? I don't know about y'all, but my money is on the fellas in the Middle East are probably tired of not having their 20th yacht and their third big mansion. Lol. So, they're probably figuring out how to get the price of crude back up so that they can enjoy the lifestyle of the rich and famous. And so I want to help us as active traders and swing traders especially capitalize on pivots in the oil sector. So I'll give you my best, and I hope to see you there. Question from Wynn, which are for long and short? These are all going to be long bias trades. These are all long bias. I don't want to short something that had been $150 a share that's now $10 a share. It may keep going down, but that would be a bad bet. I'd rather bet on the upside pivot in this region. So they're all going to be for long plays. Hey, thanks, Damon. Appreciate it. Hey, sure thing, Stacy. Let's see, a question from Yura. If you had gotten oil and gold last year, this is an updated version, so it's only 97 bucks, so it's inexpensive. Normally I charge 147 to 200 for this, so if you're a prior owner of this, if you had ordered my earlier version of this, the 2015 or the 2014 or the 2013 version, this would also be worth getting. It's just 97. I don't have any additional rates or anything like that. It's a great deal. It's a steal still at 97. So I promise it'll be worth your while. And, I'll certainly answer any questions as I always do, right? Anyway, yeah. And all of you have been with me in earlier years of oil and gold. You know how successful overall the alerts have been, and also the training and the thought process behind how to set the entries and manage your stops and use position sizing and scaling techniques more professionally. So yeah, I'd be happy to see you there. Oh, no, thanks, Phil. Appreciate that. Phil saying Wild Wild West, a great show. Yes, it was. Always, it's kind of like as a trader, we always feel like we're outnumbered, right? Because it's us versus the institutional guys and the market makers and the specialists and the people with seven-figure bank accounts. I don't have a seven-figure trading account, so, same thing, the Wild West TV show. It's like one guy, clobbering the heck out of 4 or 5 bad guys, and it's kind of encouraging that, hey, you can do it on your own and make it work. So we're going to look at both in-trend momentum plays in things like Barrick and GDX and how to trade those up at new highs, where to set triggers, how to scale in, how to set initial stops in a trading plan. And also we're going to be looking at the pivot in the oil sector instrument. So very good, intelligent, smart, step-by-step approach. Question, do I think oil is seen its bottom? I don't know. I think it's time to start thinking. I never predict. I just react. I'm a trader. It's like asking, is the S&P going up or down? Yes. One or more, or probably both. But what I do is I react. So what I'll teach y'all is exactly what kind of long triggers to set up. I would not be going short down here. I am looking to go long, at least in my own accounts, during the pivots that we're likely to see coming up at some point in the near future. So with so much upside potential, from a speculative standpoint alone, the speculators out there are likely to lift it up even if it just doubles, hey, it still doubles, right? If it goes from 10 to 20, and even better if it runs up to 60 and does a 5 times improvement on a quick short squeeze. And that's what I'm banking on, is all the institutional shorts. They're going to panic out of their shorts. And actually, it's more the buy programs. If you're familiar with algorithmic trading and buy and sell programs, institutional trading volume is driven automatically. You don't have some guy there punching out trades with a mouse in front of a monitor kind of thing like we do. They've got buy and sell stop orders, a rack of them set for both longs and shorts, and then they scale in with volume and price action. It's really fascinating if you ever learn professional trading. I know my institutional guys, non-disclosures, I can't tell you guys how all that stuff works, the inner workings, but they're light years ahead of where us as retail traders are, and because that's their business, right? Anyway, the main thing that we need to know is how to make money when their buy orders start to fill, and you start to get a rack of buy orders, say over a 2 or 3 week or month-long time horizon. You're going to see a cascade effect, right? As all the shorts, you could Google short squeeze, right? Google short squeeze. It sounds dirty, but it's not. Short squeeze. I'm just funny. I'm on fire. Short squeeze. That means when everybody's short and somebody starts to say, I got to take my profit, I'm going to cover it out, and price starts to go up, everybody else follows suit, and you see a big spike in price. What we want to do is not go short. We want to look for that spike in price to start building our positions to the long side to capitalize on a momentum play for a multi-week swing trading approach. And by the way, that's what this is all about, is for a swing trading kind of anywhere from, say, short term might be a couple of weeks, but I'm looking to bank much more significant profits in my Fidelity account and my Interactive Brokers account. So I want to manage, say, a 6-week time horizon, right? A 4 to 6 week kind of a longer term swing trade expectancy on a short squeeze play. So as soon as crude starts to bounce, we want to ladder into the trades intelligently at specific, well-developed, pre-developed or predetermined price triggers. And what I do is that, like in my Fidelity, I'll put buy stop limit orders in for 3 or 4 different price points. And that way I automatically get filled if it gaps through or sails through the trade at the price that I want to get filled at. So that way I don't have to be in front of the monitor all day. I automatically get filled behind the scenes during the market. And that's a smart way to build trades on a potential pivot or a potential bounce in these instruments. Because, short term they are starting to go up, right? This is an uptrend. Doing a 50% retracement, right? It's a 1, 2, 3 pattern. We'll see if it's able to take out new highs, and it could extrapolate for all these instruments, or even others like British Petroleum or Halliburton. I like the Halliburton chart. That's kind of the healthiest of all the oil charts because it alone is way up at 90-day new highs, despite a shooting star at a 200 moving average. So I'm not going to touch it with the 10-foot pole till it gets clear, say 37.50 to the upside. But looking for these kind of momentum plays to continue to run is what this training is going to be all about. So, all right, Stacy's asking, smart question, do I use the daily chart for most of the analysis and lower time frames for entry? Absolutely. Yeah, you're right. Good point. So for example, larger time frames, I see the fact we have a large green momentum candle. So that gets me keen to buy Halliburton up at new highs, and I'll use the shorter term chart, which is going to be my 15-day chart. So we've got a bullish cup here. Also inverse. So kind of like an inverse head and shoulders or whatever. Not quite, but the thought is we've got some bullish cup action yesterday, even stronger than ever. So I'm interested in buying this up at new highs, and that's how you fine-tune your entries, is on the shorter time frame. But you qualify the chart for consideration by looking for these patterns that you see on the daily candlestick chart, and especially looking for high volume, large, tall momentum candles. And that's really good kind of a strategy to put in place for any of your swing trades, as I've taught so many thousands of traders, or tens of thousands if you count all my videos and articles and all that. But anyway, you want to keep it simple, and that's my goal. I've gone kind of quick tonight because I'm over time now a few minutes, but I want to give you a good, thoughtful, sensible, strategic, intelligent, well-designed approach. I'm a former corporate quality engineer for the Ford Motor Company and a corporate statistician, and I'm a numbers guy. I'm a stone-cold numbers guy with dual degrees from UCLA and Cal State Long Beach, workaholic genius and industry leader. So anyway, great to see you all here. Let's see other questions. Oh, hey, you're welcome, Phil, and thanks, Dan. Hey, you too, Rogelio. Yeah, it's been a while. I remember your name. Gwen tells me Conrad has a morning radio show. Let's see what else. Hey, thanks, Phil. Question from Steve: can mini gold futures be traded like gold futures? I don't know. I trade underlying instruments. I mean, I'm not a futures guy because they're derivative and they're choppy. It's like trading the E-minis. You could get some leverage benefits if you trade them at exactly the right time, but overall it's a losing game because of the choppiness of the instrument and the rules of engagement. Kind of like with options, you got to be right with price and timing. Get the price action right and get the timing interval right, or else it expires worthless. So it's kind of, I'm sure there's a place for it out there, and I know some really sharp guys that teach it, but personally, I like just trading the underlying on small size to get started, say 20, 50, 100 shares. I'm the king of small size trading. I like to start off small ball, and then where I make my money is when I scale in on the ones that work out. And I take real small stops on the ones that don't. And that's kind of the trick to trading is I won't say pray and spray, but you do spray out your order flow in maybe half a dozen instruments with say 50 share trades, and the ones that start to work out, you can climb into them and build your trade from there by leveraging in a couple 3 points at a time as it runs in your favor. And the ones that don't run in your favor, well, you close it out at break even or itty bitty $40, $50 stop loss and big whoop. So that's what you do as a trader to make the numbers all work out, at least in an order flow standpoint. So the trades are out there to be made. I'll teach you how to do them. Anyway, that's it. There's no other questions. I will get the video of tonight's event up to the YouTube channel, and you're certainly welcome to look at it there. I'll embed it here in this page as well, kind of right here where this preview webinar spot is. So if you're looking at the YouTube video in the future, at the point you're looking at it in the future, which may be June or July or August or next year or whatever, you'll be able to get the downloadable video at whatever price it's at. For all of you who are watching tonight, I urge you to go ahead and register for just $97 to get my training. And thanks, I see the orders coming in already. Go ahead and order tonight, and I'll get you access to the members area for last year's video plus the upcoming webinar coming up a week from tonight. It's a full hour and a half plus Q&A. I'll stick around for up to a full half an hour, 45 minutes, whatever it takes to answer questions that you might have about how to implement all the different strategies that you'll be learning once you register now at tradingoilandgold.com. So thanks so much for being here. This is Ken Calhoun, your humble host, coming at you live here straight out of Colorado, right south of Denver. And y'all take care and make some money out there, right? Oil, there's gold in them there hills, right? For gold and, what's that show? Beverly Hillbillies. Oil, not going to go long yet, but we're ready. You're on the sidelines waiting to go long. Now's a good time to learn where to go long and how to develop a trading plan that's sensible, that has potential to do really well for you this year. So love to see y'all there. Thanks. You've been an amazing audience. I'll see you guys next time. Bye-bye.